And welcome into the Wealth Guardians radio show. We really appreciate you guys spending a little bit of your day with us. I'm Doug Ray. I'm the host of the show, and of course with me is Brice Payne. He's co-host and also got his second hat on as the producer of the show.
And good morning, Doug. Hope you're doing well this morning. How's the rowing going?
Rowing is right on course. You know, my goal is to do 1,000,000 meters this year, so I am right at pace with it.
Sounds good. And not getting too aches or pains yet? Too much aches and pains? And
no,
everything?
you know, surprisingly, I'm not. It's doing well.
Very good. All right. Well, speaking of rowing, have you got any vacation plans?
Not any real vacation plans, not to speak of. That's later in the year.
Okay.
Son's getting married, so we'll be going out to Colorado in April.
Very good. All right. Well, still snows in April out there in Colorado.
Good.
So
Yeah.
Very good. Well, my wife and I just started planning for our 2022 trip. And I have been, as you know, as you can tell, looking around the studio here, I'm a Jimmy Buffett fan, parrot head through and through. And he has a song called One Particular Harbor, which is a beautiful song. And I looked into it and found out about 25 years ago what inspired that song, One Particular Harbor, and have made it on my bucket list to go to that place. Wherever it was, I need to go there at some point and see where it inspired the song. As it turns out, that place is an island, a Tahitian island called Moorea.
Really?
It's Cook's Bay, where Captain Cook had landed at one point. And Belle and I are going out there for our honeymoon in 2022.
Okay.
We've been together for 11 years, just had our 11th year anniversary, and it's decided it's no more dragging our feet. We're going to go ahead and tie the knot, and that's where we're headed in 2022. So I'm looking forward to it, to see this beautiful place. But anyway.
A honeymoon, 11 years in the making.
Yeah, exactly. Maybe you could row your way out there and meet us out there. I tied it all together. There we go. Well, folks, thank you for joining us this week. I know it's pretty boring for you to have to hear all that. But, Doug, what do we got on our schedule for talk about today?
Well, you know, we were having a conversation with some folks that came in to meet with us, took us up on our offer to do a second opinion retirement plan, and yeah, we're fussing like a lot of people fuss about how low interest rates are, and they are pretty doggone low.
They're not in the negative yet, but they are low.
You know, I was curious after that conversation with them, and I looked up online at, you know, some of the best CD rates around the country, and a 1-year CD rate, you can get a whopping 0.7%.
For a 1 year, 0.7.
Less than 1%.
That doesn't surprise me.
Then, guess what else I found? And this doesn't make any sense. A 48-month, 4-year CD at 0.65%.
Same institution?
No.
Different institution?
Yeah.
Okay.
Why would anybody do that?
No, it doesn't. I don't know, unless they think that interest rates are going to invert at some point or go down.
Yeah, I just, you know, it's tough on a retiree because in the past, CDs and money markets have historically been a place where they store, you know, money, but they're just not getting any kind of reward for it now at all. Now, on the flip side of things, if you are borrowing money, like for a mortgage or automobile, hey, rates are great.
Borrow is paradise right now.
In fact, I was talking with a client this week, and you know, we got to talking about his mortgage and when it was going to get paid off, and got another 15 years to go on it. And I asked him, I said, well, you know, have you refinanced it? And he said, yeah, a couple of years ago when we did some upgrades to the house. And I said, well, what is your rate? And he said, 5%. And
wow.
I said, gee.
When was the last time there were 5% rates?
I know. I said, gee, you need to go refinance now.
ASAP. You can cut that in half, more than in half.
Easily. And in fact, I saw an ad at 1.99.
Yeah.
For a mortgage.
Yeah.
And
15 years or 2% or so right now.
So that's probably going to shave at least $200-300 a month off of his mortgage if he does that. Right. Well worth it. You know, speaking of these interest rates, I know, folks, you are really thirsty for some yield of any kind. Yeah. And I got a couple ideas for you. We have a company we've been doing business with for, 15 years now. It's the insurance industry's equivalent of a CD. It's a fixed annuity. And you can get a 3-year fixed annuity at 2.1%. Yes, 2.1%, not 0.7, 2.1%. Now, you also can get a 5-year at 2.5%.
Wow.
So it's safe.
Yeah.
You can take money out of it after the first year. You got to let it cook for a year, but then you can take 10% of the total deposit out. The minimum purchase is $10,000, so it's not huge. You don't have to have millions to get these things.
But they operate essentially like a CD.
They absolutely do. It's compound interest, and it's essentially
you're not taking any risk.
It's an insurance company's CD. That's what it is. It's a fixed annuity, 2.1 for 3 years and 2.5 for 5 years.
Not to be confused with other types of annuities out there, by the way.
Absolutely. It is just like a CD. So if you're interested in something like that, just give us a shout at 336-391-3409. I mean, interest rates have been so terribly low for a long, long time. And honestly, I don't see them going up a whole lot in the future. Do you?
Not anytime soon. No, they've really got to wait for, because that's, if they raise interest rates at all or too fast, then it's just going to sink the recovery. And so they really want the recovery to happen. The government needs more taxes coming into them, so they're trying to get as many people back to work as possible. So I don't see them raising interest rates in the next year.
And in a way, I think the government's kind of painted itself in a quarter because, they have spent so much money. What's the debt now? Almost $30 trillion.
I don't even keep track anymore.
Yeah,
I stopped keeping track at $20 trillion.
Yeah, it's just crazy. But if interest rates go up much, well, the government's not even going to be able to pay the interest on that debt. Right. So that's how they painted themselves in a corner, really. So, yeah, at 0.7% for a CD and 0.65 for a 4-year CD. It's crazy. It's absolutely nuts. So give us a call. Again, those rates are 2.1 for 3 years and 2.5 for 5 years. Safe, guaranteed money. 336-391-3409.
Now, honestly, what we would like to do is be able to sit down with you and put together a full financial plan. This is one thing that we keep our eye on, but we really do holistic financial planning for our clients. So we'd like to be able to sit down with you and see what other suggestions we might make to help you in your retirement planning. We operate as fiduciaries, and Doug, you're a retirement income certified professional, as am I. You're National Social Security Association certified, and I'm sure a couple of other certifications there that I could throw out if I could think of them. But that's what we do. And folks, again, the phone number is 336-391-3409. Some of you out there are getting closer and closer to retirement, and you're starting to realize that maybe I need to do some financial planning around this and make sure that I am not retiring too soon, but I sure as heck don't want to work any longer than I have to. So if I could have retired last year, I just as soon know that now. Well, we can help you get to those answers. And what Doug is talking about with interest rates just plays one of the key parts into how we help our clients financially plan for retirement.
Yeah, this is a great way to actually kill two birds with one stone.
There you go.
As they say.
Yeah, there it goes.
Good rates and good planning.
Very good. Well, Doug, what else do we want to talk about here in the first half before we go to break?
Well, the market's been a little bit up and down like markets do. And every talking head I listen to on the business channels is they're expecting a good market this year.
Okay.
It's a very expensive market, as we all know.
And you do keep your eye on the markets. You have that. You have those market channels going all the time in your office.
I do. I watch it quite a bit, and I'm concerned at the level and the expense of the markets, and all the more reason why people, if you've got retirement dollars in the stock market, you need to have some sort of a control mechanism, a hedge, if you will, some kind of downside protection for your money. And we kind of specialize in that.
I was going to say, that is what we specialize in, is making sure that if you are invested in the market and the market drops 30% or 40% almost like it did last year, that your portfolio is only dropping a fraction of that. That's what we work on when you are in retirement. The source of your paychecks at that point is your nest egg. It's not just something sitting on the side, and you do not want to suffer 30, or more percent losses. Heck, you don't even want to suffer a 20% loss in retirement because that can be devastating. So we help our clients create a balanced portfolio that has you participating in the upside, but sheltered to a certain degree on the downside. And if that sounds appealing to you out there, folks, 336-391-3409 is how you reach out to us, and we would be happy to sit down with you just like we sit down with a couple hundred clients a year and help them with their financial planning. Well, we're about to cut to break here, and I've got a trivia question for you, somewhat related to the times. Talking about President's Day here. Only 2 people who signed the Constitution, Doug, ended up becoming president. George Washington was one. Who was the other? Only 2 people who signed the Constitution ended up becoming president of the United States. George Washington was one. Who was the other? Now, you're not going to try to guess it now.
I think I know. I'll hold my answer till we come back.
Oh, excellent. I like it. All right. Folks, stick around through the break. We will be back in just a moment. And welcome back to the Wealth Guardians radio show, folks. Thank you for sticking around through the break there. We appreciate you hanging in there with us. And if you are listening to this show, and I think you are because you hear us, I want you to ask yourself if you're 5 to 7 years from retirement, or if you are even closer than that to retirement. Now ask yourself, have I sat down and made a full financial plan with some fiduciary financial planners to make sure that I'm okay through retirement? If your answer is yes, and you're still thinking you'd like to get a second opinion, then we'd like to meet with you. If your answer is no, then you really want to sit down and talk with at least a fiduciary financial planner and make sure you've got some kind of plan for retirement. And the good news is that's what we do at no cost and no obligation. So let me give you the phone number to reach out to us. It's 336-391-3409. 336-391-3409. It's a very simple number to pick up and call and get yourself in our offices, or we can meet with you virtually as well or over the phone and start creating that financial plan for you at no cost or no obligation. So there's that food for thought. Now, Doug, I asked a trivia question. Welcome back from the break, by the way. I asked you a trivia question, and everybody else out there, before we went to break. Only 2 people who signed the Constitution ended up becoming president. George Washington was one. Who was the other? And you said you think you know this one.
I think I do. I've got it, I believe, narrowed down to 2 people.
Okay.
It's either, I think, Thomas Jefferson or John Adams.
It's neither of those.
Really?
Neither of them.
You stumped me again.
Well, I don't stump you that often. You're usually pretty good at this. Actually, it is James Madison.
Okay.
James Madison became president. He was the 4th president of the United States, 1809 to 1817. He was hailed as the father of the Constitution, and he also co-wrote the Federalist Papers, and interestingly enough, was the 5th Secretary of State from 1801 to 1809, and was a very close advisor to George Washington. So I had no idea before I looked that up that only 2 people who signed the Constitution actually ended up becoming president.
Yeah, that's a good one.
Very good. All right. And Doug, what are we talking about here for the second half? The first half we were talking about interest rates, but the second half we are talking about...
Well, we're going to talk about, and specifically this is for you business owners out there, regardless of what kind of business you own, at some point in time you're going to want to probably retire, sell your business, turn your business over to... some sort of a succession plan. So we're going to talk about that for a few minutes.
Okay, sounds good. And you've got the itinerary there in front of you. Go ahead and get started on
things. The first one says, if I execute my business plan, my retirement plan will be taken care of as well. Sounds logical, doesn't it?
It does, though you could have those 2 things be completely separate. You could have created a business plan, but not a retirement plan per se.
Mm-hmm. And think about this, too. You never know when it's time to walk away from your business. I mean, what happens if, health-wise, you can't continue to do your business, and maybe the market is not right for you to sell your business yet?
Okay.
All the more reason for you business owners out there to have some kind of a retirement plan and build assets in those retirement plans, because you need to take care of
Right.
other contingencies.
Makes sense.
And they're going to be a tax advantage reason to have a retirement plan.
Oh, well, there's special ways to have that business succession plan.
Sure, you can do 401ks, you can do SEPs, Simplified Employee Pension Plan.
Yep.
Any number of things like that. So, it's obviously logical to think if I build my business and it grows and grows, and I've taken care of my retirement right there. But may not necessarily be the case for some.
Very good. All right, let's talk about the second one here. I don't necessarily have a lot of money in the bank, but I have a really high net worth when you factor in the value of the business. We've had no shortage of people who have come to us who a majority of their assets are in their own business.
Mm-hmm. And that's quite true of most business owners. And the fact of the matter is, while you think your business is worth X, it may not really be. And just last year we had clients who were thinking about selling their business, and I'm not going to mention names on the radio or anything, but when I asked them, I said, well, what do you think your business is worth? And they didn't really have a clue.
Right.
Yet this is a business they've been working in and building for 30 years.
Yeah.
And I said, well, you need to go out and find somebody to value your business. And they did, and I think they were kind of surprised at the value. I think they thought, as most business owners think, their business is worth more than what it really is. It's kind of like everybody thinks their house is worth more than what it really is.
Or I was thinking in my head, car collectors or car restorers, they put a lot of blood, sweat, and tears and time into it. And for that, there's a certain value there that they think they should get X amount of dollars for that. And on the open market, it's just not worth quite what they had invested into it, particularly when you consider the time.
Absolutely.
So the business is the same way. Hey, I love this business. It's got to be worth X amount of dollars. And unfortunately, the market says it's worth less than that. Yeah. Let's move on to the next one.
Next one says, it's kind of like the same one we just talked about. It says, when I sell the business, I'll make more than enough to support myself in retirement.
Well, not necessarily.
Not necessarily. And what if you get ready to sell your business, it's time to sell it, and you can't for whatever reason?
Yeah, it's not a guarantee that somebody will offer you the fair price for it.
If you're a restaurant owner right now, yeah.
There you go. Perfect analogy. Perfect one. Thank you.
And trust me, if you're a restaurant owner, I feel so sorry for you.
We're not picking on you, but
not at all.
We're acknowledging the times here for you.
In fact, I'll tell you this: my wife and I have probably gone out to eat more in the last year than we ever have, just to try to support the local restaurant owners.
I found myself giving 25, even 30% tips.
Yes, absolutely.
Instead of the normal 3% tips that I normally give. I'm just kidding there. I don't really give 3% tips. But let's go to the next one then. My family is going to take over the business, so I know they'll run it well and take care of me.
Well, what's our favorite saying around here? It depends.
It depends. It depends. There's some things that it depends on.
Maybe that's the case, and we certainly hope that's the case for you. But a lot of times it's not. The family member comes in and maybe doesn't see eye to eye with the owner of the business, that family member, whether it's a parent-child relationship and things just don't go right, or maybe that family member just doesn't have the talent you've got.
That's true.
And they just are not able to run the business nearly as successful as you. So, passing your business down to a family member may work in a lot of cases, and in a lot of cases it may not. Yeah,
very true. And, Doug, speaking of, let's talk a little bit more about succession plans for business. There is preparation that you need to do for that years in advance, particularly if you're a partner. Mm-hmm. If you're not the sole owner, but you're a partnership. Talk a little bit about the types, you're a business owner. Talk about the types of things that you do for succession planning.
Well, that's a good topic. Let's take my best friend as a perfect example of this. He was a successful real estate agent in Fayetteville and owned a RE/MAX agency. And then had a couple of other partnerships on the sidelines going, developing properties and so forth. And in 2006, at the age of 49, he had a massive heart attack and passed. Wow. You don't expect that, do you?
Not at 49.
No. And of course, he when that kind of thing happens, the banks immediately freeze your accounts.
Yes. Right? Yes, they do.
So thankfully, Teresa, his widow, Remax was basically able to go in and give her a short-term loan, so that she could keep the business running. But in a situation like that, you need to be prepared for it. And a lot of times the way to prepare for the unexpected is with something called key man insurance.
Okay, talk about that.
So key man insurance is, let's say if Brice and I are in partnership in a business, we'd each buy a life insurance policy on the other. That way, if one of us passed away, met with an accident, or just wanted to get out of the business for some reason, then you could either, if in a case of a death, the life insurance part of it would pay off, or you could use the cash value buildup in the key man insurance to essentially buy yourself out of the business.
Because if you don't have that and the other partner were to pass away unexpectedly or disappear, then you're having to dip into your own reserves, which you may or may not have, to keep the business afloat. And if it doesn't stay afloat, then that's a whole bigger problem then, obviously.
That, and if you don't have something like that in the plan, then all of a sudden you're now in partnership with the widow.
Okay.
And that might not work
well as well.
Yeah.
Right. So. Now, we don't do succession planning ourselves, but we certainly have people that we can refer somebody to if they haven't already taken care of that. And we have had people who come in here, they're ready to retire or they're starting to think about retiring. They've owned their own business for a number of years. They've got maybe $1 million or more into that business, and they have never looked into how to do succession planning for that business, and we can point them in the right direction and include those plans in our overall retirement financial planning.
Yeah. I want to take just a minute here and remind everybody, we started out the top of the show talking about interest rates. Everybody gripes about how low bank rates are and they're not getting paid anything to put their money there. I mentioned looking up a one-year CD at 0.7%. Well, we've got an alternative. You might be interested in this. We can get you 2.1% guaranteed for 3 years, compounded interest. It is a fixed annuity. It's the insurance industry's equivalent of a CD. I always say it looks like a CD, it smells like a CD, but it's a safe and guaranteed investment. Now, if you want to go a little further out in time, 5 years, that rate's 2.5%. So 2.1, 2.5 is sure a heck of a lot better than 0.7%.
Are there minimums for these?
There are. There's $10,000 minimums up to a maximum of $1.5 million. And after the first year, you can actually take income off of them or 10% of the total value of the annuity. And like a CD, if you check it out early or cash it out early, there's going to be a penalty.
There's going to be a penalty, sure. So you don't want to make that mistake. Yep. But Doug, it sounds like a sound plan. And what's our phone number that somebody would have to call to get in touch with us?
Yeah, it's 336-391-3409.
336-391-3409. Additionally, they could go online and check us out on our website, www.thewealthguardians.com. We've got a lot of great financial planning tips and tools that you can use on our website. In fact, every time I look on our website, I'm finding something new that's there that I wasn't aware was there previously. So you can certainly take a look at that. But again, folks, 336-391-3409. If you'd like to sit down with us and do some financial planning or have your plans have a second set of eyes looking over them, we'd be happy to sit down with you either in the office or virtually or over the phone. That's what we can do. Folks, we wish you all a very happy rest of your weekend. We do thank you for joining us, and we look forward to seeing you right here at the same time, same place next weekend. Take care.